Okay, good afternoon, traders. Welcome to Paul's Monday Market Update for Monday, 10th of June, 2024. I hope you're all well. Hope you've had a good weekend. Hope you've enjoyed the rather shenanigans that we've seen going on over the last few days, and I hope you've had a good start to the week. As always, just before I begin, it'd be great to know those of you here in the room for the live session, if you can just confirm that you can hear my voice and see the slides and that the technology is working, that would be most appreciated. Thanks very much. Cheers. Thank you, Simon. Nice here. Thank you. Thank you. Fabulous. Okay, so for those of you joining us for the first time, the Monday Market Update is literally that. It is me flying through as much as I can fit in the next 25, 30 minutes, looking at STAM, some charts that might be of interest to you, and then a look at the live markets. It is just a market update. It is not a signal service. It's not trading recommendation. It's just what I'm looking at, which may be of use to yourself in your own analysis and trading endeavors. As always, you're always welcome here. Just remember that you are responsible for your own trading decisions. If you want more help or support, then you can look at the mastermind group, which is due to begin this week, or certainly this month, looking at basically building a small group to help provide structure and accountability and consistency and discipline, and some coaching clinics so that you can engage in some trader development. There's a QR code there, there's a bit.ly code, or you can email me if you want more information about that. Also, if you want more education, every Monday at 2 o'clock London time, I provide a webinar for active trades. Today's one, in about in about 90 minutes time, is on about trading trend reversals. You can it's free. You can either use the QR code there to take you to the register point, or go onto their website and sign up. And as I said, every Monday, 2 o'clock. That's what we'll be talking about today. Okay, right, let's dig into the main element. So I appreciate if you're new to the Monday Market Update, or if you're new to trading, this might not necessarily look easy to understand, but it's not that difficult. You get the hang of it. This is the FX STAM. This is the model that I do myself and create every weekend. Okay, spend a bit of time trying to identify where's the strength and where's the weakness, primarily within FX markets, but then also in the season commodities as well. Idea being that it helps me prioritize where I should be spending my time, energy, and resources for the week ahead. So here we are. Gosh, we're into week 24 of the year, almost halfway through the year already. So week 24, 10th of June. Where's the strength? Where's the weakness? Well, we have seen sterling kind of, pop its way back up to the top of the pile. As you can see, it's been leading a kind of a bit of a merry dance over the last month or so. Once again, okay, I'm of the opinion that sterling strength is more to do with the weakness of others than particularly any inherent strength in the sterling, especially as we run towards the general election. Okay, in less than a month's time, in about 3.5 weeks' time. So, but it is there, and it kind of knocked Kiwi dollar off the other top of the pile. Okay, as you can see, for the last month or so, Kiwi has been up there. Probably a good deal more of that to do with sort of deemed stickiness in inflation, naming that their interest rates were unlikely to be cut before other the major players. So, of course, in this last week, we had the ECB cut on Thursday. Okay, and Euro's got bigger issues to deal with, which we'll come on to in a moment. And we also had the Canadians cut as well last week. Okay, so and they sat there at the bottom of the pile along with the Japanese yen. Okay, Japanese yen, they've got to their policy meeting at the end of this week, I think, if I remember right at the top of my head, and that might provide a bit more insight. But really, there's those two that are still bottom of the pile: Canadian dollar and Japanese yen. Swiss franc, I talked about this a couple of weeks ago. Even though it's been down in the bottom of the pile, it's worked its way up to 3 now. I mentioned this in the VTP calls and now in the active trade calls about the price action on the Swiss franc. Okay, having it reversed over the last couple of weeks, and that's continued through in the STAM. And as I said, we've gone from the bottom of the pile to almost near the top of the pile there. US dollar, it's kind of, it had a strong Friday after the NFP numbers. Okay, those NFP numbers took the edge off people's immediate interest in rate cuts in sort of June, July time. It's more likely that it's going to be pushed out to September. I think personally, that was an initial reaction based upon the fact that I think that the expectations for NFP jobs were about 165,000, and I think it came in at 272,000, and so the headline number was much bigger than expected, and then invariably that means that things like interest rate cuts are likely to be pushed back. But the thing is, and I don't consider myself a fundamental expert. You dig into those numbers underlying that those NFP jobs, and it doesn't really make a great deal of sense at all. And I suspect we will see, as we have seen for the last year or so, that don't be surprised if that number is effectively rounded down, okay, and reviewed down in a couple of months' time, etc. But it did the effect of giving everyone a bit of a bump on a Friday afternoon, gave dollar a bit of a shot in the arm, all right. But it's still dollar still kind of languishing down there. We shall see whether we get a move, later in this week, because remember, of course, we've got a bit of US data, kind of throughout the week, but of course the main one is FOMC on Wednesday evening. People aren't expecting a cut at that rate, but everyone will be keen as mustard to see what they've actually, Mr. Powell and his team have got to say. That's what everyone's going to be looking at. So we've got FOMC Wednesday, Bank of Japan on Friday, and then of course we've got some UK close to home. We've got UK numbers in basically unemployment jobs numbers, claimant count change tomorrow, and then GDP on Wednesday morning. And of course, people are going to be looking at that. Well, they'll be looking at that anyway, but also because of the run into the election and what if anything, it'll do for Mr. Sunak. Personally, I think after Thursday's debacle, he's toast. All right, he's done. He's not coming back from that in any way, shape, or form. It's more about the kind of the scale of the loss. All right, especially last week with his Thursday bet, and also Farage getting back in the fight. Sunak is toast. I find it very hard to find any kind of way to see any way for him back, any path back for him. Okay, rightly or wrongly. But of course, talking about dubious political moves, it's a case, of course, many of us last night were watching the elections in Europe, and of course we had sort of interesting results in Belgium, in Austria, in Italy, in Spain, but Germany, and also in France, and it's a case of. Mr. Macron. Mr. Macron's response was to effectively, disestablish Parliament and to call an election, I think, for the 30th of June, the end of the week, so only a few weeks away. Many people are seeing it as a very brave and bold move, that he's basically standing up to the fact that people will vote for Le Pen in regional elections, but never when it's the national election and stuff. And so he's basically they're trying to perceive him. He's taken into the fight to them. My own view is that even if he wins, he doesn't really win. He's a lame duck, and so we'll see whether it is whether it's a victory for him or whether it's his own political Dien Bien Phu. So I appreciate that comment probably means nothing to anybody born after 1980, but anyway, nonetheless. Nonetheless, that is going to have an impact on the euro, okay, and the euro indexes, which we're going to have a little look at in a moment when we switch across to the live charts. And you can see that followed through. All right, this morning, okay, euro has just basically been the weakest since the market reopened there. A little bit of bump for Aussie and Kiwi, but nothing really to get terribly excited about. Simon asks, what do you think might happen to GBP when Labour will win? If Labour would win. My view is that if it is a clear landslide, there will be markets hate uncertainty, and so having that certainty might give basically a bit of a sterling a kind of relief rally, all right, just because there is at least certainty. But then I think what will happen is that as the numbers and the true economic policy starts to come out once they're in power, and also that will start to weigh on people, and then also I think Labour have, well, in fact, both the Conservatives and the Labour have, they have many factions within them, and it really depends upon how quickly Labour fall into fighting amongst each other and stuff. If they have a huge big majority, that will take longer because basically winning kind of gets you privileges, doesn't it? But yeah, I don't think it'll be massive. I'm not perceiving it a massive move and stuff. And on the VTP stage 2 calls on the Tuesday, we go into the sterling a bit more and have a little look at the COTS reports, okay, and how the big boys are positioning themselves there. And as I said, there might be a relief rally, but I wouldn't be getting too excited. Wouldn't be getting too excited about that. So, but yeah, good question. Thank you. Euro's shaky, sterling's at the top just because everybody else is rubbish, and basically we'll have to wait and see what the dollar does this week after the news. When we look at the indices, and we'll look at the live charts in a moment, what we saw is S&P here and NASDAQ. They are still in my strategic buying environment, and they both traded to new highs. Fascinating. My own view would be that that's probably mostly dragged up by Nvidia. Last week we looked at Nvidia, and we printed a weekly island gap, and said that wasn't terribly bullish. I was wrong in that. That's just a sign of the kind of madness that we're in. That having even printed an island gap with a bearish pin bar, literally just last week, just basically Nvidia battered its way to new highs and stuff, and that's probably an indication of the sort of the madness of crowds that we find ourselves in. But anyway, if you're still long in Nvidia, well done, you. DAX also remains strategic buy. I think when we look at that in a moment, we'll there'll be a bit of sucking of teeth on that. What we saw is oil remains bearish. Okay, gold has gone bearish. No surprise there that we had a big dump on Friday. Okay, so gold price action wise looked like it peaked. We'll have a look at it in a minute. It peaked a bit a couple of weeks ago, but then on Friday the Chinese announced that they were no longer buying any more physical gold. They had basically they'd acquired enough. What that actually means is open to interpretation. One of the things that isn't really being covered is this week. I think it's this week is the meeting of the BRICS ministers. Okay, and I have a feeling that could be a rather momentous meeting, and I have a feeling that if that went down a very dark path, there could be all sorts of trouble that come out of that. So I'll be keeping an eye on to see what, if anything, happens from that. But certainly, gold and silver sort of sold themselves off with that, based upon what we're looking at. So. Not for the first time, a bit of a mixed picture. Yes, indices are pushing to new highs, but as I said, if you look into that jobs number and look at in particular, the kind of differences between part-time jobs, full-time jobs, Native Americans as opposed to immigrants, and you start looking at the job numbers, you start to find it a rather curious little rabbit hole to go down. But yeah, more of that on another day. All right, so let's have a look at a couple of charts of interest. The reason I put these in is because, I don't consider myself a fundamental specialist. I don't necessarily consider myself an equity specialist, but traders, we all like to look at an interesting chart. We can all learn something from there. This is the CAC 40. Okay, it's a weekly chart, or CAC 40 being the French index. Nowhere near as glittering or as exciting as as the Nasdaq or the DAX. Okay, but it had been grinding its way up there. Nice morning star there in the weekly chart. Nice pull back to the 50. And what we had already sort of kind of run into was here at 8,000. I don't think this was a key reversal, but it was quite a bearish kind of move. And we had printed a double top, and invariably our highs were always lower. And then, as you can see this week, from where we closed on Friday, all right, and from where we've opened so far this week, that was kind of a gap down. Probably not a massive surprise. You can see there's a double top at the big round 8,000 number. We've gapped our way down. I don't really trade CAC very much. If I have to say, I don't really trade the European indices much. Anywhere near as much as I used to. Pretty much they're for the most part, they've either been dull, mad, or in the shade of the American indexes. But we always like to look at the picture, and that, as I said, that was already showing up to me as a kind of weekly double top. And what we've done there is now, as always, I'm interested to see, Does it basically fill that gap? Okay. Does once the initial reaction wash out, does it basically rally its way up to 8,000? And then if it put in basically, I don't know, maybe rejection candle there, that might be a nice sort of swing trade there to work with that. That's what I'd be watching for. That'll be my scenario to look out for. If it does that, I'll have a piece of it. If it doesn't, I'll do nothing. Simple as that. Let's have a little look at Adobe. All right. Why? Because Adobe is one of the earnings this week that's coming out. I think it's Thursday. We're out of the let's call it like the big boys in terms of earnings, but there's always something going on. As I said, it's always interesting to have a look at a chart. This is Adobe weekly. I'm sure all of you in some way or other, use PDFs and stuff, so you'll have exposure to to Adobe in one way or another. Once as always, when I look at this particular chart, I look at here is that we were in a bit of a range there, okay, between about 320 and 370. Broke out and pushed our way up high nicely. And then as always, okay, having done a nice move, what do we print here? This is a bearish engulfing candle, bearish key reversal candle, okay? Price drops, comes back up, and then once again forms this weekly double top there, breaks the neckline, and then invariably, the ski jumps its way down and drops. And we've been pivoting around the 200 period, just under $500. Okay, and now I'll be looking to see, well, was this a flush? Okay, was this a flush? Before we get great news that basically pumps us back up towards 540 and the 50, or do we just get a timid little move back to the 200? Before we work our way down there. So let's say I'll be looking, see Thursday, end of the week, to see how Adobe plays out there, okay, and what you can take away from that. Finally, before we look at the leg markets, as I said, lots of doom and gloom around Europe. So it's nice to have a heartening piece of good news. This is Ryanair weekly chart. I talked about this about a month or so ago, maybe a bit longer and stuff, about how it basically Ryanair had been trading on its way up to 21 euros, and actually how Mr. O'Leary, the head of the owner of Ryanair, if Ryanair traded above 21 for a greater period of 30 days, okay, or a month, then he was basically he would get a €100 million bonus for that. And I suggested that most people might want to take this as an opportunity to short Ryanair to basically take their revenge for being messed around by Ryanair over the years, and also to cut Mr. O'Leary's wings, to clip his wings a little bit. And for once in the world, listen to me, and you can see that actually what we've done is we've just traded our way down from 21 euros back down to the 50 period moving average, around sort of 17, 18 euros there. So would not surprise me if we had a rally up there, and then I'd be looking for basically to get up to just under 20 once again. Just see what scenario would be, drive away up there, and then basically does it roll over? Does it provide basically a lower high? All right, but clearly a lot of people did not want O'Leary getting that 100 million bonus. So clearly he's annoyed an awful lot of people over the years, and people were quite happy to take their petty, childish, immature, puerile revenge by shorting at 21. So he didn't get his bonus, but make of that what you will. All right, so there you go. Just a few charts of interest. Let's switch across to the live markets now. So if you'll just bear with me for a moment, we'll just switch across. Just bear with me. Right. Okay. So let's just bring these charts up here 1 second. All right. Okay. So I'm hoping you can hear me. I'm hoping you can still see. Now, this is one of my chart packages. This is a profile. Let's get the drawing tool up here. This is a profile of kind of European indices. So I've got DAX here. I've got the CAC, which we've just looked at. Then basically the IBEX, the Spanish index, the MIB, okay, the Italian, the Euro 50, the overall stocks, and the FTSE 100, along with the kind of German NASDAQ and the bond. All right, okay, German bonds, German debt. So not unsurprisingly, okay, you can see this is just an intraday chart. You can see that basically we kind of gapped down on the opening, and this morning for most of the session we drifted down. No surprise, we probably had a bit of profit taken off that double bottom on previous week's low. CAC, as we looked at CAC on the weekly chart, but then even on the intraday chart, we closed, we opened, we dropped. All right, and it's trying to put in a bit of a higher low, but we'll see whether that plays out. IBEX, okay, Spanish. Yeah, once again, we had a gap open, and interestingly, that was the one the gap filled pretty much straight away. The gap filled, okay, and then we dropped down, and once again, we trying to put in a kind of a double bottom there. The MIB, all right, MIB, we gapped down here. Sunday gapped down and continued, okay, and then you can see, we basically decelerated before we had a little bit of a bump up there. Will we fill that gap today? I'd be surprised, but maybe that gap fills this week. Euro stocks did not massively dissimilar to the DAX. Not a shocker there, really. Okay. The interesting thing is that such as the people's surprise that both the DAX and the Bund sold off. Normally, very often there'll be an inverse correlation there, but not today. All right, not today. That's the way. And FTSE, whilst it dropped its way down, actually pumped its way up and stuff. So that's not just because the FTSE is great. It's just the least worst option. That's where we are, ladies and gentlemen. The kind of least worst option. So let's have a look at the quick look at the big major indexes. Having looked at the Euro ones there, as I said, not a massive shock. Gap down and continued down. Nobody's going to be hugely surprised by that. It's more about whether you believe that they will invariably whether they will, how quickly they'll bounce and fill that gap. Okay, so if we look at the kind of the sort of the big boys here, right? As I said at the time, let's just draw into this is Nasdaq on the weekly, SP on the weekly, SP 500, okay, and the Nasdaq traded and worked their way to new highs last week, okay? And as I said, I think a lot of that has just been dragged its way up by Nvidia. Because if we look at the Dow didn't do that, all right? The Dow is under the 20-period moving average, and last week printed a sort of inside bar pin bar, inside bar doji, sorry. And then if we look at the Russell as well, the Russell basically, printed a sort of bearish engulfing candle without crossing highs. And I suppose this is where we've got divergence, right? We've got some divergence in terms of Nasdaq and S&P 500 still sort of wafting their way to new highs, but the Dow and the Russell sort of just Main Street as opposed to tech companies rolling over a bit. So this will be something to watch. Of course, as I said, FOMC Wednesday night. We've got some other data Thursday, Friday, but it'll be interesting to see whether that divergence increases or whether it basically gets closed by the FOMC. But that's what we're definitely looking at. DAX on the weekly, you can look at that here. DAX on the weekly, that's just having hit those highs. You can see that's just drifting down. Indecision there for the last few weeks. It's a little bit of a flag, a little bit of a channel there. Be watching that. Even FTSE. All right, let's just have a little look a bit closer to home before we go on to the currency pairs. FTSE having rallied its way up there, nice evening star formation there, and it's just working its way. It's just working its way down there. If I go down to the daily, that's almost like, I'd be saying that's almost like an inverse cup and handle, which you'd be expecting it to basically to break and drop. All right. So, I think if the 50 holds, all right, it's kind of bullish, but if the 50 breaks, then we're into bearish. And I think it might be this week. Is it this week or next week where the main two parties are looking to release their manifesto? And I think clearly a lot of people will be looking at Labour. What are they actually generally committing to? And I think maybe that has an impact on the FTSE this week. We've got UK news, but I think also Labour manifesto. Everyone expects Labour to win. That's going to be the main thing that will have an impact on that, but also upon sterling. I said oil. Oil has been in a downtrend, but it's had a little bit of a bump. I think people are probably more interested in gold at the moment. Gold on the weekly chart, boss. Here we are. We kind of double topped there. False breakout, real big bearish candle. And last week you can see that is a lower high bearish pin bar And part of that is, as you can see in the daily chart, that was Friday's action. As I said, China announced that they basically had done enough physical buying gold, and that's where we just fell then. And I think there'll be a reaction to that. There'll be a little bit of a bump for it, and then maybe we step down again, and maybe we've started to put in a few legs lower. That will also have an impact on what we see from dollar. And what we'll do is we'll just quickly go through, as always. We'll have a little look at dollar, euro, and sterling. I always finish on sterling, okay, a bit closer to home. Yeah, as we looked at the STAM, the dollar's kind of, it has been middling, weakening, but actually Friday's action sort of changed that. So if we look at here, the dollar index, we were talking about here, weekly chart dollar index, we were drifting lower there. You can see lower. And then last week we, pumped down to particular levels and then bounced off it and printed, there's a bullish pin bar on the weekly chart. You can see that daily, that is a proper bullish key reversal, bullish engulfing. You can see already we gapped up there on the US there. Okay, no surprise of gapping up on the US because we were gapping down on the euro. We can you can see that for yourself there. Okay, we're going to look at euro anyway, but you can see the gap there. Okay, that's what people be looking at. And really on the daily charts, you can see for yourself. Aussie dollar, big sell off. Okay, on Friday, Kiwi dollar. Okay, remember Kiwi has been top of the pile. Okay, it was top of the pile last week. No surprise. Even sterling, which is top of the stamp, big sell off there. All right, and we had a big buy there. Okay, that's dollar against Canadian dollar there. Okay, big shove. Even dollar against Japanese yen, big shove. And you can see, dollar against Swiss franc, not as big a shove. And I think that's an indication of the Swiss franc strength I mentioned. But you can see for yourself, Friday was basically, bullish dollar day. And now we'll be looking to see, does it follow through? Does FOMC, put the wind in the sails, of that, or does it leave it becalmed? Okay, if the data and the commentary is not actually how we're particularly looking at. So that's what we're looking there on the dollar. Quickly, because I don't want to overrun too much. Euro, this is a profile of euro here. So euro dollar, euro sterling, euro Aussie, euro CAD, euro yen, euro Swiss, euro Kiwi, and the DAX we've looked at. Euro dollar, big sell off there, and look at that from Friday's close, all right, to kind of Sunday night, sort of Monday's open. We have clearly gapped down there considerably. Euro against sterling, okay. You've heard me talk about how on the daily chart we've been sat on this 85 level anyway for it in a downtrend. But look at that. Look at the way we gapped through that. Okay, we closed through it on Friday, but bosh, we basically closed and we gapped open there, and there's a big gap, quite a big gap there. Okay, we look at Euro New Zealand, even kind of Euro New Zealand. Euro basically it had basically strengthened against the having been in a really sound downtrend because there was New Zealand strength that changed on Friday, but then basically it changed again over the weekend. We look at euro against Canadian dollar, from where we closed Friday to where we've closed out. There's a gap there that hasn't been traded through there. Euro against Japanese yen. Okay, it has filled the gap there from where we closed. Okay, from where we opened, we've pushed up there. You might look at that and stuff, but I'd say that that is mostly kind of fill that, and that won't follow through. The interesting one as well, also is as we've just said, is if you look at this as euro against Swiss franc. Euro against Swiss franc, this year on the weekly chart, euro weakness, Swiss franc strength. That's what I'm looking to trade. But we talked about it a couple of weeks ago, how we printed lots of weekly engulfing candles, key reversal candles, how that played, and that has just continued through. And I go down to the daily chart, look at how that's played, and even Friday was an inside bar pin bar, and we just dropped down from there. That is euro weakness, Swiss franc strength, quite clear. Let's just finish off a quick look at sterling. Sterling was a bit mixed on the intraday ways this morning. Okay, let me just pull these up, look at these bigger charts. Put these on the weekly charts, quickly go through. So we've already, as I said, kind of looked at euro Euro sterling. Okay, we've already looked at the kind of FTSE. Euro sterling, as I said, is just down at 85 and pushing lower. What I'm interested in is if you look at cable, pound against US dollar. We talked about it last week, how we'd had a bit of an indecision week, all right, bit of a doji, not really indecision. And then last week, look what we printed there. There's bearish pin bar there. Okay, that is, dollar strength sterling means, which we just said we saw dollar strength on Friday. We've got UK data tomorrow on Wednesday, FOMC Wednesday, and US data on Thursday and Friday as well. I wonder, is that enough to basically to drift us down back towards the 20? That's what I'll be looking for. Okay, the price action I wouldn't exactly say has been super exciting or super, easy the last sort of 3 weeks, but Friday's price action, I wonder whether it's going to be enough to shove us down there. Okay, certainly on the 4-hour chart. Yeah, and that's what I'll be looking at in terms of that. Pound against yen, we had basically got up to the intervention highs. You can see there, I hope. You can see there, I was talking we'd get a reaction off it, which we did. Now we're holding back up above the 20, but remember, we have got Sterling News Tuesday, Wednesday, FOMC Wednesday, Bank of Japan on Friday. So I suspect we'll probably quieten up a bit. I'm not expecting great moves until towards the end of the week on pound against Japanese yen. Pound against Swiss franc is just that story we've talked about. This is the weekly chart. Okay, that weekly chart there, we having had a great long trend, bearish key reversal, bearish engulfing candle back beneath 115, and we're drifting our way down. That is just Swiss franc strength is coming in. All right, that's what we're doing. Maybe the last couple of days have gone sorry, but that's what we're seeing across the board. Swiss franc strength. All right. So there you go, ladies and gentlemen. Sorry, overran a little bit. As I said, it is just a fly through as much as I can sort of cram in sort of 25, 30 minutes. I hope you found that useful. I hope it's given you a little bit of insight and a few things to look at for the week ahead. As I said, 2:00 today is Monday Market Matters webinar for active trades. You're very welcome to join me there. And then for those of you on the VTP, there'll be the usual call at 7:00 tonight and stage 2 call tomorrow at 12:30. There's lots coming out this week. It's going to be an interesting week, so make sure you keep your powder dry, choose the best trades, manage risk, and I hope you all have a great trading week, and I will look forward to speaking to you soon. Take care, everybody. Okay, thanks. You're very welcome, Lisa. Glad you enjoyed the Ryanair comments. All right, have a great trading week, everybody. Cheers.